The JP Morgan Equity Premium Income ETF, known as JEPI, has been one of my larger holdings over the past several years, and I've honestly enjoyed holding on to JEPI quite a bit. As of right now, I have almost 1,250 shares of JEPI across my multiple brokerages, with an average cost per share of around $53 per share. Now in this video, we're going to dig a little bit deeper into this popular covered call style ETF, explain how this ETF works, how much I currently earn per month from dividend income received from JEPI. Then later on in the video, we're going to go over exactly how much an investor in theory would need to invest into JEPI in order to retire completely off the dividend income and then some. So whether you're currently holding any shares of JEPI or maybe are planning on doing so in the future, make sure to stick around, drop a like down below, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the market. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So first, a quick little overview about JEPI for those investors watching this video that might not really understand how this ETF works, what it is, etc. It's a pretty simple covered call style ETF. JEPI buys into a basket of equities, and then with that has an option overlay of written out of the money S&P 500 index call options that seeks to generate distributed monthly income. Now, because of this covered call overlay strategy, there are pros and cons, of course. Some of the pros are that it helps generate more income on a consistent basis, and along with that can potentially reduce volatility. But also with that covered call overlay, one of the cons are that it caps upside potential, which means that when the market turns bullish, things like JEPI aren't necessarily going to see as many gains as other stocks or ETFs across the market potentially. And because of this covered call overlay, that's exactly what is taking place over several timeframes with JEPI so far. Although JEPI has been able to generate a ton of income in the form of dividends for investors, which we're going to talk about here in a second, and the fact that JEPI could be an amazing tool for investors near retirement or even potentially being able to retire early, JEPI has not grown nearly as much as the overall market over several timeframes, and on the max timeframe, JEPI is only up 12%. But like myself and many investors, we bought into JEPI for the dividend income on a monthly basis, which unfortunately also has been shrinking ever since pretty much late 2022. And this is due to things like less volatility in the market, option premiums being priced in a little bit lower, which is honestly completely normal with these covered call style ETFs. A lot of times these sort of ETFs are not going to pay you the same exact amount every single month. But all in all, over the last 12 months or so, even with the dividends being a little bit lower, JEPI has still paid investors like myself around a 7.5% yield, and in the last year is up around 3.18%. So as of today, at least, I'm up around 10% over the last year with JEPI if you include dividends, price return, or just look at the total return. So all in all, are there better ETFs out there, or even for that matter, better covered call style ETFs out there that do pay dividends consistently and also have the potential to move up in price a little bit faster? I'm personally finding that there definitely are. I'm a bigger fan as of right now, at least, and of course I can change my mind in the future, but I'm a bigger fan of JEPQ, JEPI's brother or sister, and SPYI, different things like that. But all in all, like I sort of mentioned towards the beginning of the video, I honestly have no complaints about holding on to JEPI, at least during the time frame that I've been holding on to it, because as of right now, I'm not only up slightly as far as price return goes with all my shares of JEPI, but on top of that, with all my shares of JEPI across my portfolios, with my 1,248 shares, if JEPI pays on average, let's say 35 cents per share per month, I'm earning around $430 every single month, which I can reinvest into JEPI or other things. And side note, I'm definitely not buying any more JEPI. I'm currently buying things like JEPQ, SCHD, or SPYI. But still, $436 per month, if I were to drip that back into more shares of JEPI, would give me an additional 8.4 shares of JEPI ongoingly, which honestly isn't bad. But one of the bigger questions when it comes to these higher yielding investment assets is how much money do you really need to invest into them to be able to retire off the dividend income from them, or even potentially, this is also a new popular thing, be able to retire early. So let's go through and plug in some numbers and see how much it would take for an investor to retire early, or I guess even to retire off just JEPI alone. Now, this is just going to be a blanket example. Of course, this is all going to depend on your expenses, your situation, but just for this video's sake, according to the Bureau of Economic Analysis, the average cost of living per person in Florida, for example, is $50,689, or let's just say $51,000 annually. So for this specific example with JEPI, we are going to try to figure out how much you would need to invest into JEPI with a 7.52% initial dividend yield as of right now in order to retire and have $51,000 minimum coming in per year in dividends. Now again, take this with a grain of salt. These numbers are all estimated. This is just for video's sake, and I definitely recommend you using one of these online free dividend calculators and type in your situation. It can be a lot of fun. So first off, let's test out $150,000 invested into JEPI and see what that gives us. So $150K invested into JEPI, year number 1 would earn around $11,600 in dividend income, and if we reinvested all those dividends back into more shares of JEPI, by year number 2 you'd be at $12,500. So with $150,000 invested into JEPI, it's pretty obvious that you're not going to be able to retire early off of it. But how many years would it take? In theory, it would take around 26 years of buying $150K worth of JEPI, reinvesting those dividends, and not buying a single another share. So this is an example of not spending any more money after that $150,000 investment. And of course, once again, you can plug in different numbers and do this a million different ways. But let's try another one. If an investor was to get to the point to where they can invest $225,000 into JEPI, so in theory, the first year, the $225K would earn around $17,500 per year in dividends. So now we're actually getting somewhere. And in this example, it would take around 19 years from the start, from buying $225K worth of JEPI and reinvest those dividends every single year. Now, if an investor was to invest, say, $400,000 just into JEPI, could they retire then? The reality is that $400,000 day one for JEPI would earn around $31,000 per year in dividends. But with this example, it would only take around 8 or 9 years until the dividend income surpassed what the average cost of living is, at least according to Google. Now with $500,000, that seems like more of the sweet spot. $500,000 invested into JEPI could allow an investor potentially, to retire early with around $51,400 in annual dividend income by year number 5. And of course, if you were to keep reinvesting those dividends into more shares of JEPI, the dividends could be substantial. By 30 years in, we're talking $205,000 in dividend income, again, theoretically. So I guess to answer the question, how much would it take an investor to invest into JEPI, the JP Morgan Equity Premium Income ETF, in order to retire or even potentially retire early? Well, of course, it's going to mostly depend on things like that investor's cost of living, and again, how much they invest into JEPI day one, continuously invest into JEPI, etc., etc. But more or less, I think the answer is simple. JEPI and some of these higher yielding options could potentially allow investors to retire off the cash flow much, much faster, potentially, than other traditional investments like index funds, Vanguard funds, etc. Now, I personally would never build a portfolio with only higher yielding cover call style ETFs like JEPI, JEPQ, SPYI, QYLD, etc. But throughout my portfolio, I do like to have those positions also sprinkled in large amounts to help my portfolio generate a substantial amount of cash flow on a monthly basis. Because as of right now with that cash flow, what I'm doing is reinvesting it into more different shares of stocks and ETFs. But later on in the future, I might start taking my $6,500 per month in dividend income that I'm currently receiving and use it to retire early, help friends or family, go on vacation, who even knows. But all in all, in my opinion, of course, I do think that covered call style ETFs, especially high quality ones like JEPQ, even JEPI, could be a lot of fun to sprinkle in your portfolios to really see your monthly dividend income skyrocket compared to other things like index funds. But maybe most importantly of all, now I want to hear from you guys down below. Are you currently, as of right now, holding on to any shares of JEPI, the JP Morgan Equity Premium Income ETF? And if so, how many shares of it do you have? Let us know in the comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.